Yesterday, the European currency failed to rise above the local high of 0.9870. As a result, several sell signals generated in that area dragged the price down. Nevertheless, bulls managed to protect the level of 0.9830. This indicates that there are traders in the market who count on a continued upward correction in risky assets. This is fully justified since this growing optimism among investors in the US stock market about upbeat earnings reports and the general outlook, which also boosts demand for such risky assets as the euro and the British pound. As for the latter, it gained strong upside momentum after the Bank of England delayed the start date for the launch of its so-called quantitative tightening program. Then the regulator ruled out postponing the plan or at a later date, and the pound sterling posted steep losses. Later on, the situation stabilized when Britain's central bank said that its program would not affect long-dated UK government bonds. In the meantime, the trading chart shows that the price has formed a triangle pattern. Market sentiment is mainly bullish, thus the British pound may well continue its upward correction. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on inflation in the UK. The consumer price index is expected to rise to 10% in September. Even if the reading exceeds analysts' estimate, market sentiment will probably remain unchanged. After all, investors have already priced in the central bank's forecast, suggesting that inflation could hit 13% by the end of the year. Europe is also set to release data on consumer prices. Euro area annual inflation is expected to be 10% in September 2022. Up from 9.1% in August. If the index is above economists' consensus, the euro may advance, as this will force the European Central Bank to act more aggressively. However, the regulator is unlikely to go for it. Everything goes according to plan. Nobody expects inflation to cool immediately. The ECB has just started to deliver sharp rate hikes. Thus, they will hardly bear fruit in such a short period of time. In addition, traders may take notice of US building permits and housing starts. Economists forecast starts will decline to a rate of 1.475 million units. As I have repeatedly said, the slower pace of growth in the property market will be the first sign that the US economy is sliding into a recession. Thus, today's statistics on building permits and housing starts will be sort of a forward-looking indicator pointing out the future economic state. From a technical point of view, the 1-hour chart shows that the euro-dollar pair continues to trade in a range which has widened a bit. The levels of 0.9871 and 0.9824 act as resistance and support respectively. A false breakout at 0.9824 will create a buy signal. Bulls will try to push the price up to 0.9871. If the price breaks through this level and tests it from the top down, the volume of long positions will increase further. In this case, the euro will recover to 0.9917 and 0.9948, and probably the parity level. If trading activity at 0.9824 is subdued or the price forms a false breakout at 0.9871, a sell signal will be generated. Thus, the European currency will dip to 0.9786 and 0.9734. At the level of 0.9734, it will be possible to go long on a rebound with a view to catching an intraday correction of 30-35 pips. Long positions at 0.9786 can be considered only amid a false breakout. As for the British pound, the market is expected to become less volatile. After all, traders are already aware of the immediate plans of the Bank of England. Let's see which way the price will get out of the triangle pattern. If bulls are able to regain control of 1.1334, its breakout and top-down test will create a buy signal. And the pound sterling will head to 1.1403 and 1.1488. At the mark of 1.1488, I recommend going short on a rebound, counting on an intraday correction of 45-50 pips. Short positions at 1.1334 and 1.1403 can be opened in the event of a false breakout. The target of bears will be at 1.1260. Going long at this level will be relevant only amid a false breakout. In this case, the pound-dollar pair will get stuck in the sideways range of 1.1260 to 1.1406. If the price breaks below 1.1260 by midday, the British pound will come under stronger pressure, sliding to 1.1166 and probably 1.1098. At these levels, it would be a wise decision to go long on a rebound. Everything will depend on how fast the pound sterling gains downside momentum. Best of luck!